Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonia Shenoy, and these are the top stories that we're tracking at 1:30 p.m. Midcaps outperformed their larger peers, with tech plays in the broader markets extending their rebound even as PSU lenders retreat. Stocks stay ranged ahead of the US Fed monetary policy decision later tonight.
Yes Bank's recent rally ends after it announces the final deal with Carlyle and Avendus. Morgan Stanley, meanwhile, initiates a coverage with a buy rating. Expect asset quality to improve.
The board of 197 Communications, which owns PayTm, announces an 850 crore buyback of shares via the open market route, disappointing investors. The maximum buyback price of 810 rupees per share is at a premium of 50% to the current market price, but it offers little solace.
And the Colgate-Palmolive India stock drifts lower as analysts remain circumspect of the new CEO's growth plans, while positive commentary and a buy call from Spark Capital gives Nalco a boost.
Dr. Lal's Path Lab gains after the management tells CNBC-TV18 Delhi government's plan to offer free medical tests will not hurt the diagnostic player, as it will lead to referrals and specialized testing.
Well, good afternoon, folks. This is Midcap Radar. I'm Sonia and Reema's with me. We have, of course, a market that is holding on to its gains from earlier in the morning. There's nothing much that has happened through the course of the day. Very, very range-bound. And I guess the market is just in wait-and-watch mode. But there are some stocks that do deserve mention. From the large-cap names, it is fresh 52-week highs for names like SBI, for L&T, for Axis Bank. So across the board, there are secular moves that you're seeing on the upside. And of course, banks continue to rule the roost. In the mid-cap end of trade, and my colleague Vivek will talk more about that, but in the mid-cap end of trade, you have names like Polycab, Bharat Forge, IRB Infra that are sitting at fresh 52-week highs. In fact, the stock Polycab, from its IPO price of around 600, is now almost touching 3,000 rupees. That's a big jump that we've seen in about 3.5 years for Polycab. IRB Infra as well, the infrastructure space doing quite well, and banks are at fresh 52-week highs. UCO, Bank of Maharashtra, IOB and Union Bank. In fact, in our segment Midcap Movers, Vivek is here to tell us about some of the other midcaps that he's spotting which are doing well in trade. Vivek, over to you.
Well, good afternoon. That's right. So quite a few stocks on our radar. Like you mentioned, some of the names, especially in the capital goods as well as the infrastructure space today, are doing very well, moving up on strong volumes and have hit fresh 52-week highs. Before that, HUDCO continues its gains today again at a fresh 52-week high. But some of the names from the, infra and cap goods space that we're seeing, IRB Infra, ITD Cementation, moving on. We also have Triveni Turbines. All of these stocks today are moving up and have hit fresh 52-week highs. An interesting stock, from the education space, MPS Limited, this particular stock today, once again has hit a fresh 52-week high. Now, moving on to some of the stocks, that are moving up on strong volumes in today's trading session. Two names, we have Chennai Petro as well as MRPL on the back of expectations of a lower GST rate for standalone refineries. Both of these stocks today are moving up quite strongly. The other names that are doing quite well on strong volumes, Paradeep Phosphates, as well as RHI Magnesita, these stocks too are doing quite well. On the other hand, one stock that you mentioned years back after the news flow today has seen quite a bit of profit booking that's happened. Mirza International today down on very strong volumes. And other two names that we are looking at, Strides Pharma today has seen quite a bit of a dip, and also Finiotex Chemicals that has fallen quite significantly from its recent highs.
Thank you very much for that. Insurance companies, New India Assurance and GIC, both of them are up 11 to 12%. So that's another space which is attracting a lot of interest. It's a fresh 52-week high seen on GIC as well. Let's welcome Jay Thakkar, VP and Head of Research at Marwadi Shares and Finance now for a technical check on the market. Jay, afternoon. It's another quiet session, but holding on with a positive bias. Mid-caps are doing very well. The mid-cap index is up 0.7%. The small-cap index has gained 0.8%. So there is that element of outperformance. The trade that you would recommend on the indices and your individual picks?
Hi, very good afternoon to you, Reema and Sonia. Well, as far as the indices is concerned, I would say that yes, Nifty has provided a nice breakout in today's trading session above the levels of 18,600, 650 range. There is a small hurdle around the levels of 18,700. It really needs to take off those levels prior to its weekly expiry tomorrow. I mean, above those levels, we can see Nifty making again lifetime highs. Failing to surpass 18,700 in this weekly expiry, I mean, this can get Nifty into a range of 18,500 to 18,700. But then Bank Nifty is the space to be. I mean, the index has been forming high of sky bottom continuously, making fresh lifetime highs every day. And the momentum there has been absolutely bullish. I believe that 44,000 to 43,800 on the lower side on the immediate basis is a very crucial support level. I mean, till Bank Nifty is holding those levels of 43,800, the probability of it inching towards 44,500 on the immediate basis is quite high, and thereafter, we can see a fresh breakout above 44,500 as well. So on Bank Nifty, one can remain long at the current levels as well. As far as Nifty is concerned, one should buy around dips around 18,600 or maybe about 18,700. That should be the trading strategy going forward on Nifty. But the Nifty Midcap, that has clearly provided a breakout from that consolidation of 32,500 to 29,500 range, and I'm expecting the short-term target of 33,800 and on an aggressive basis 36,000 on Nifty Midcap. So I have 3 buy recommendations from that area. Polycap, as Sonia was just discussing, and that has clearly provided a breakout after almost a year or so. And I believe that this stock is now heading towards the levels of 3600 on the immediate basis. One can place a stop loss below the levels of 2850 and go long on Polycap. I have another 2 buy recommendation, both from non-FNO segment. The second buy recommendation is on Dhanlaxmi Bank. When PSUs have been really doing good, I mean, this is one stock where the floor is still quite in favor of the bulls. It's trading around the levels of 2375. One can buy this targeting 3450 and placing a stop loss below 20. And third recommendation is on Sona Comms. It's trading around the levels of 465. I'm expecting this stock to bounce back quite sharply as it's quite oversold and the weekly momentum has reversed from sell to buy. Sonacom is expected to bounce back to the levels of 525, 550. One can buy this, placing a stop loss below 425.
Welcome back. Well, the market is very, very quiet, so not too much happening, but there is a stock that we have on our Spotlight segment. It's called Affle India, very closely tracked. But why are you looking at it today, Nima?
There is a board meeting today where the board is going to consider whether they want to issue certain shares either on a convertible or non-convertible basis. And one of the reasons they are planning to issue these securities is to consider an inorganic acquisition. So that's the reason why we are watching Affle. The news came a couple of days back that the board is meeting on the 14th, and today the board meeting is there. Now, Affle has been fairly acquisitive as a company. In fact, in the last 3 years, in FY20, the company did 2 acquisitions. In FY21 as well, the company did certain acquisitions. But if you look at the acquisition trends, they have been fairly conservative in the overall value and the payout that they've done. Those are the recent acquisitions done by the company. The last one was Jam, and that the payout was $40 million. Before that, in June of 2020, they had acquired AppNext for $25 million and MediaSmart in February of 2020 for about $10 million. What the management said in the conference call, which took place in October or November post their Q2 earnings, when quizzed about their acquisition strategy, they're saying that M&A should be seen for strategic reasons. Do it for the opportunistic value in terms of pricing. If they had done an M&A acquisition last year, it would have been far more expensive than it is right now. So clearly the management believes that the pricing is right. And remember, this is a management which is very focused on the kind of value that they pay. They're very conservative. They don't want to overpay. They don't want to make, do an acquisition which is too big to chew. So in that sense, I think the management commentary seemed to indicate that they find the timing right to go ahead and make an acquisition because the pricing has come down in the overall market. They see an opportunity when the markets are down. They should go ahead and look for strategic acquisitions, look for value-driven deals because you will find them cheaper at this point of time. So it gives you an indication in which way the management is thinking, but there is a board meeting today where the company is going to consider issuance of securities with which they will raise money to consider and look at an inorganic move. So that's Affle for you. The stock is pretty flat in trade, but we've got another one.
Oh, absolutely. The stock in focus right now is V-Guard, right? So it's in the company recently announced the acquisition of Sunflame Enterprises, which is the popular kitchen appliances brand. Vahishta is with us to explain the rationale behind the 660 crore acquisition, so it's not a small one. Vahishta, over to you.
Hi, Sonia. Thanks for that. Absolutely. V-Guard has made an acquisition of Sunflame Enterprises, which offers a wide range of product portfolio, which includes to the likes of cooktops, chimneys, pressure cookers, and the small kitchen appliances as well. Now, Sunflame has had a strong revenue growth in the past. 263 crores in FY22 has grown in FY20 has grown all the way to 350 crores in FY22, and EBITDA margins currently are in the range of 12 to 13%. The cost of acquisition is 660 crores. V-Guard currently has a cash and investment balance of 170 crores, which means that the remaining part of the acquisition could be funded via the debt route. The transaction is expected to be completed next year early, so that is approximately in mid of Jan 2023. Now coming to the main part as to what is the rationale behind the acquisition of Sunflame, there will be significant synergies in the product portfolio as well as in the geography mix. Number one, scaling up their kitchen appliances business, which is a fast growing but a small category for V-Guard at present, with approximately 150 to 160 crores of revenue on an annual basis. Number two, Sunflame has a very strong brand recall. V-Guard is predominantly in the southern Indian markets, but Sunflame has an 80% share coming in from the non-south market, so that will also help in the geographical mix improvement. So all in all, seems that the deal is going to be value accretive for the V-Guard shareholders. The combined kitchen appliances business would have revenues of approximately 500 crores. Back to you.
Thank you very much for that. V-Guard is predominantly a south-based player, but this acquisition will help them diversify geographically, because Sunflame, the company that they are acquiring, has an 80% market or presence in the non-south region. But another company that we're tracking and a stock that we're looking at is JSPL. Now, we had a chat with the management earlier, and they confirmed the company is purchasing Monipa's Angul plant for about 410 crore. The company had told us earlier that Angul unit's capacity is 1,050 megawatts, and it will ensure cheaper power for JSPL. In fact, the cost efficiencies they are looking at is close to 25%. As I said earlier today, we had a chat with Bimlendra Jha, the managing director at Jindal Steel and Power. Here's a slice of that conversation.
Capacity is, as you have said, 1,050 megawatt, but it is 2 units of 525 each. It is 410 crores that we have paid for the asset purchase under NCLT. And we are going to make sure that these capacities come on stream in 2 phases. That means we will be commissioning the first turbine and then the next one over a couple of years. So that should approximately anywhere between 1,500 to 2,000 crores. It should cost the first one, because most of the things are in place. The numbers are already budgeted for in our books for, with the kind of EBITDA that we are having. We do not expect that the debt should go up, as it will be done over a period of 2 years. And as you know, that the cash flows will be funded from the business itself.
Welcome back. You're still watching Midcap Radar on CNBC-TV18. Now, Apollo Hospitals MD Sunita Reddy spoke to my colleague Ekta Batra at their flagship Indraprastha Hospital in Delhi, NCR. She spoke about Apollo 24/7. She said they expect to raise a maximum of $200 million in the business by the end of this year. So let's listen in. She also spoke about a target to double the business in FY24. Listen into the excerpts.
Apollo HealthCo will become EBITDA neutral next year.
So it'll be EBITDA neutral. What about, are you expecting your user base to grow 5x, your medicine orders to grow 5x? That's what's envisaged and estimated at this point.
Yes, so we looked at GMV and it's grown tremendously. We currently will close the year with 1,500 crores of GMV, and it will double next year. And which is why, we're quite sure that we will be EBITDA breakeven.
Okay, so you're expecting it to probably go to 3,000 crores by FY24?
Yeah.
Okay, so that's, what about fundraising? Because y'all have said that y'all are probably looking at fundraising maybe by the end of FY23. Yes. Where do things stand? Because in the past, y'all were on track in terms of fundraising, but that got derailed a little bit, or it got delayed. Where is it?
So delayed for a great reason. In terms of performance, we're ahead of what we had planned. And I think it's just getting better, because revenues, GMV is picking up, revenues are getting, we're seeing a huge increase in revenues. In fact, like I said, a doubling next year. So if you look at the absolute cash burn, it's about 150 crores. And we think we'll have only 1 more year of, where they'll need cash. So while we are looking at investment, I think we'll look for investment that values us, and we at Apollo Hospitals do not want to be significantly diluted, because this is the new age company that I'm sure has great growth trajectory.
So 200 million is probably what you're looking at in terms of a fundraise on the maximum or the upper side for Apollo?
Yes, you're right. Maximum 200, but not really required 200.
And how much would you be willing to dilute?
Maximum, I would say 20%, but since we're not looking at 200 million, it could be less.
Okay. Would it be a strategic or a financial investor?
We have options, let me just say that. And we'll decide closer to our board meeting.
Would it be a combination of both, more than one investor?
No.
And would it probably close by FY23?
Yes, certainly.
Okay, so maybe by the end of, in the next 3 to 4 months is when we could probably expect that to take place.
Okay, that was a piece from a very special series we've planned for you, Medicine Box, which is a deep dive into the world of pharma and healthcare. Catch the full conversation this evening at 5:30 p.m. only on CNBC-TV18. With that, it is curtains down on this edition of Midcap Radar. Your stocks comes up when we return.